We are back with another monthly X Dividend video. However, I have mixed it up as promised and we have separated the UK and the US stocks into two separate videos. So hopefully this will be more beneficial to you if you only invest into one or the other. So this one right here is the US one. I have got the UK one out as well on my channel. Link is in the description below as well, so feel free to check that out after. But here we are covering 5 popular stocks from the S&P 500 going ex-dividend very soon in the month of December. And as always, guys, I am not a financial advisor, so please do your own research before investing into the stock market. And if you find this video useful or interesting, please hit the like and subscribe to my channel if you haven't done so already to keep up to date with these ex-dividend stocks. So the first company up here is ticker symbol WM, that is Waste Management. Now Waste Management, clues in the name, it is probably one of the biggest waste management companies in the US with a market cap of $50 billion. It is going ex-dividend on the 3rd of December, paying out on the 18th of December. And it currently has a dividend yield of 1.83%. If we look at how this has been performing, obviously, like every other company, it did have a big sell-off back in March, and it crashed all the way down to $92 per share. It now sits at $119 per share, and over its maximum course here, all the way since 2013, this graph it's just been gradually going up and up and up. So it's a very stable company in terms of share price growth. And if we look at its PE ratio, it isn't too bad there. It sits at 28. It's paying a nice dividend, EPS of $4.25 per share as well. And it is predicted to have in the next 1 to 3 years a future return on equity of 25%. And look at some of its financials. It is making a profit. That has obviously dropped off a little bit this year compared to previous years. But it is making a nice 10.81% profit there. And debt, unfortunately, debt has increased a little bit. It is debt to assets of 74.52%. With a debt to equity ratio of 136%. That debt to equity has actually decreased. It was 189%, so it has gone down to 136%, and that was just earlier this year. The dividend, like I say, is paying that yield there of 1.83%, and that is a current payout ratio of 60%. So there is still room to grow the dividend. It has been paying it and growing it for 10 years plus. This company seems to be a very stable one there. Like I say, share price growing and growing. Waste Management. So up next, the second company today is ticker symbol NKE, one of the big ones, Nike. So I don't think Nike needs an introduction here. It's not considered a big dividend stock. However, it is a growth stock that has been growing over the years, and it does pay a dividend as well. It is going ex-dividend on the 4th of December, paying out on the 29th of December. Currently has a yield of 0.83%. So like I say, it's not the biggest dividend yield out there. That's going to get you around about 28 cents per share on the next payout. But like I say, this growth has been amazing. It did sell off and it went all the way down to $67. And if you got it at that price, you're making over 100% returns because it's now at $134. And look at the maximum graph here. Another one we love to see. It was slowly going up. And then this year, it's just rocketed up. Maybe everyone's because they're exercising, etc. a lot more this year. Sports brand company in that. It's now at all-time highs pretty much of $134 per share. So at this price, analysts do have this as overvalued, but like I said, this is a growth stock, which over the years has just been growing and growing. The PE is quite high there, 73.10 on the PE ratio. If we look at its profit, it is making a profit, a small one, but nevertheless a profit, 6.79%. And a debt to assets there has increased quite a lot this year. Not all debt is bad though, and this is a 74% debt to assets with 119 debt to equity. And for a company like this, I don't think that is too bad at all. This dividend yield has been increasing over the past 10 years, and it currently has a payout ratio of 57%. So a fairly good payout ratio, a growing company in terms of its share price as well. That is Nike. The third company up, we're going for another big stock here, and that is ticker symbol WMT, Walmart. So I don't think Walmart needs an introduction as well. Massive in the US. It is going ex-dividend on the 10th of December, paying out on the 4th of January. And it's going to be paying a dividend yield of 1.42%, which is going to get you around about 54 cents per share. And if we look at their 1 year graph, very similar. You know, it has been growing and growing. This is what we like to see, companies that are just continually growing. And the maximum graph, once again, it is very impressive. This is all the way back from 2013. It has just been growing and growing. And then once again, it is now pretty much at all-time highs of $151 per share. And at this PE, it's not even too bad. It's 28 PE ratio. The industry sits around about 16, but this is valued roughly in line with its current fair value, and it is predicted to have a future return on equity in the next 1 to 3 years of 19%. So it's not the highest return on equity, but nevertheless it is still getting a very nice return. And if we have a look at some of its financials, it is making a very small profit, but it's never been a profit heavy company really. You can see 2017, 18, 19, you know, it's always been quite low, but it is making a 2.84% profit margin. And the debt to assets for a company like this is very low actually, 68.43%, and just a 51% debt to equity ratio. The dividend has been growing and increasing for 10 years plus, and it currently has a payout ratio of just 31%. So still room to grow and increase that dividend should they want to. So a very good company. It is growing and it is paying you a nice dividend of 54 cents per share on the next payout. The fourth company on this list is ticker symbol PSA, Public Storage. So Public Storage is going ex-dividend on the 14th of December, paying out on the 30th of December. And this is a real estate investment trust, aka a REIT. It basically owns and operates and develops loads of storage, self-storage facilities. You've probably seen their storage facilities all over the place. It's paying a very nice dividend yield of 3.65%, which is going to get you around about $2 per share on the next payout. And if we look at the 1 year graph, once again, it has done pretty well. Okay, it's sold off recently in the last few months. You can see this little sell off from 232 down to 220. But overall, it has been doing pretty good. And the maximum here, you know, it's been a little bit up and down. So we're kind of sitting around about the average of where we have been since 2015. But currently at $222. But this is a big dividend paying company. And we can look at some of their financials. They are making a very nice profit of 53.41%. And that is a debt to assets of just 20%. So a very low debt to assets, a very low debt to equity as well of just 29.6%. Their dividend has been growing and increasing over the past 10 years plus. The payout ratio is very high, it's 93%. But as this is a REIT, they need to pay out a lot of that back in the dividends. So that is quite normal for a REIT to have a very high payout ratio. So you're going to be getting a nice dividend yield on this one, going ex-dividend on the 14th of December. The fifth and final one in this list today is ticker symbol GILD, Gilead Sciences. Gilead Sciences is a big biopharmaceutical company. You probably have heard of them this year with everything going on. They're going ex-dividend as well on the 14th of December, also paying out on the 30th of December. And they have quite a high dividend yield of 4.53%, which is going to get you around about 68 cents per share. Their year has not been so good. We can see they did shoot up early in the year, maybe to do with all this news about potential vaccine, but it has sold off quite a lot lately, and we're down to $60 per share. Its maximum graph, once again, it's not the most attractive graph here, but you know, it's a biopharmaceutical company. It is a risky, they're not generally the most safest investments. They're going to be a little bit up and down, and this currently sits at $60. If we have a look at its PE ratio, it is at 13.96. So that is pretty low compared to the industry of 28. So at its current price, it is quite low, but it does have a predicted future growth of 36.7% in the next 1 to 3 years, which is a very good future growth. And it is also making a nice profit. It's a 23.99% profit margin, which is good to see. And the debt to assets isn't too bad either, 63.45%. So that debt to assets is fairly low as well. However, the debt to equity has been increasing, is at 167%. The payout ratio for this one is quite high. So the dividend yield, not sure how stable this dividend yield is of 4.53%, but nevertheless it is paying out on that next payout date of the 14th of December. So there we are, that was just 5 of the US stocks there going ex-dividend very soon. I've covered more of the popular ones. As always, there are a lot more, but I know a lot of people hold these companies, so it could present some exciting opportunities to get in potentially before that next dividend payout. And as I said, I've got the UK one out as well. It's on my channel. Link is also down below, so feel free to head over and check that out. It is really appreciated. And if you've enjoyed this video or you just want to help me out as well, please hit the like and subscribe to my channel. Thanks for watching, and until next time,